Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about IGL. A very good business but coming at attractive levels. Let's understand why the stock has fallen from the top. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about IGL, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, then kindly take the monthly membership on YouTube. Now about the company. Established in 1998, IGL provides compressed natural gas (CNG) services headquartered in New Delhi. It is the leader in its space and have distribution across India, especially in New Delhi and northern part of India. It also distributes cooking gas through a pipeline. The market cap of the company is around 26,500 crores, and it has come down from the top. If you look at the financial, these are December quarter numbers. Sales went up by 48%, but profit dipped sharply to by around 8%. The point here is the margins and cost pressures was shown on the numbers, and I think this is going to continue going forward with the you can say gas prices being higher, and the fact that oil is at more than $100 per barrel. ROE of around 20% is decent, but is set to reduce, as I said, with the kind of numbers that it's going to come out with, which would be more subdued than we are seeing at the moment. And margins at 24% is still good, but I think it's going to come down to teens over the next couple of quarters. In terms of performance, stock has been continuously declining and hasn't performed that well. Have declined since September last year. Until now, it has gone down something like 40% from the highs, and numbers have been subdued, and probably that is the reason that probably the market has priced in the fact that during the December quarter or earlier, the numbers would peak out, and the numbers will reduce going forward. So it is getting priced in, and probably at these levels, when I'll talk about the technicals, I'll let you know. But looks like most of the negatives are priced in. Raw material and higher crude prices is taking a toll on the company, and these kind of companies like MGL also getting hammered on the bourses. So we are seeing a situation where these companies which use gas as raw material or gas derived products are in difficult situation. The dividend payout is decent at the moment. In terms of technicals, there is strong support between the 300-330 levels, and this is a very strong support. So I believe that once the stock dips even about 4-5% from the current levels, one can accumulate. It looks extremely weak on charts, but from a long term point of view, these are decent levels to accumulate. Will perform once crude prices come down, and hopefully over a 2-3 year period, once this war escalates, escalation of war reduces in Europe, and things get back to normal. We are having another wave of the pandemic in China and many other countries, so that goes down. We could see major rally in stocks like IGL. The major up move is expected above 400 levels, and hence buy in a staggered manner. Do not rush to get into it, but from a 5 year point of view, these are very attractive levels. So if you do not have avoid at the moment, probably you can start buying either in two ways. Either you buy here and wait it out 5-6 years, or you wait for a clear uptrend to emerge. That is a breakout from 400 levels, where you can buy again. It can be a performer in the long run. Should perform well. It has a very good dividend yield as well. So overall, the company is pretty good, pretty strong, robust. Management is good, but it is caught up in a very difficult cycle at the moment. Uh, one can either accumulate here or buy above 400 later on when the cycle reverses completely. I would prefer buying once the cycle reverse and buying 20% higher rather than buying here and waiting for everything, because that will be an opportunity cost lost for you, and a lot of times that happens that you'll be stuck with one of the companies. So this was my video on IGL. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.